Right. Welcome back to Limitless Life podcast. I'm Olga Binyaminov, your host, and this month we are diving into all things that relate to financial life because the way we handle money shapes not just our bank account, but actually our freedom, our options, and most importantly, our legacy. Today, I am so thrilled to bring on a special guest, Joseph Barbera. Joseph is a certified financial planner and a wealth management associate at Wellington Shield. It's a firm that just celebrated 100 years as a member of the New York Stock Exchange. And in fact, this past Sunday, Wellington Shield rang the NYSE closing bell to mark that continental with a milestone. Joseph earned his master's degree in finance from Georgetown University, and he got his bachelor's in communication from Boston University. When he was in Georgetown, he actually consulted for both London Stock Exchange and Microsoft. And that gave him such a global perspective on markets. He started his career at Fidelity Wall Street branch, and now he works just steps away from the NYSE on Broad Street. He's licensed with Series 7, Series 66. He has insurance. And Joseph not only oversees approximately 350 million in assets under his management, but also regulates returns in to Georgetown to speak on wealth management. So when I say you are in good hands today, I really mean that. Joseph is someone who understands money both academically and practically. And I know he's going to break down investing in the way that just feels simple, clear, and empowering. Joseph, welcome to Limitless Live. It is such a privilege to have you here.
Thank you so much, Olga. It's great to see you. Good afternoon to everyone who's tuning in. Yeah, you've got the story down to a T. You're pretty good. The NYSC ringing was in August, where it's actually on YouTube. If you check out the NYSC's YouTube page, you can see you'll see me briefly for about 1 second in the frame, but then you'll see the rest of my firm and senior management ringing the bell. So that was a really big milestone for us celebrating our centennial. So thank you, Olga. I appreciate you having me on. It's important to be really well versed in wealth management and building your wealth throughout your life because it's something we all have to do. So thank you.
Absolutely. Thank you for bringing your wisdom today. And before we dive into the strategies, can you just share what actually drew you into this world of finances and wealth management? Like you said,
Sure.
communication and then
Yeah.
to finances. So what inspired that shift?
Yeah, I think that's a really good thing to ask out the gate because I don't have a traditional background to finance. I actually was originally a film student at Boston University. The degree says College of Communication on it, and that is the school I went to. But truthfully, I was a screenwriter. I did screenwriting. I wrote short films. I directed a few short films, and I did a lot of film internships. And I really enjoyed the communication aspect, the teamwork part of it. And I still to this day am a big moviegoer and fan. But as time went on, I found myself doing more and more of the financing aspects of projects. And I also I could tell that my grades were reflecting that I'm kind of maybe a bit more of a quantitative mind at some point. And somewhere along the line, I think COVID-19 happened, and I graduated into the pandemic, and that really sparked me wanting to fully pivot. I graduated BU unemployed out of school, and I felt kind of like I lost my direction. And so I took advantage of all that downtime and I went ahead, I studied, and I got into a couple business schools. And that's where I wound up at Georgetown getting my master's in finance. And at that point, I fell in love with it. I realized like I probably should have been doing this the whole time, but it's a good experience to call back on because I think people really appreciate the unique kind of background. And it's still to this day, there are skills I learned at film school that apply to what I do every day. It's actually kind of weird.
Absolutely. And I love that because often people really think that finances is only about numbers, but really
No.
communication,
Yeah.
understanding people's story is so important. And Warren Buffett says the most important investment that you can invest is the investment in yourself. So,
100%.
Joseph, you've combined those two skills absolutely beautifully.
Thank you.
So, for someone who's just starting out, what are the first principles or frameworks that they need to understand before they put money into the market?
Sure. So I think the first thing someone needs to understand and come to terms with before they begin investing in anything is the potential for loss and risk. Because look, an investment, it's inherent in the definition, is there is the potential for loss. And so that's going to help dictate what kind of assets or investments you should be thinking about. If someone is looking to get involved in investing and they have no appetite for risk, they want really safe returns, but they want some level of growth, that's going to drastically change what you should be looking at versus someone who has all the appetite in the world, doesn't care if their account is skyrocketing one day or in the gutter the next. It's going to completely determine what kind of asset class you should consider and what kind of things you should be investing in. So I think having a good framework on what is your risk tolerance is critical. And we'll probably get more into that as we go on today. But also, I think having a good framework on these things take time. You're playing the long game with wealth building. It's not a get rich quick scheme. There are certainly people who have luck and come into great amounts of wealth through investing quickly. It happens all the time, but don't go into it with the wrong mindset. You have to be, this is a long dated game you're playing, and you have to be patient. So, those are some important kind of frameworks to have going into it.
I think it's a very important reminder because sometimes we just rush into opening accounts without really understanding what we're doing, or we just chase something that was known to be the latest stock, right?
Oh, yeah.
So what I can say about this is just don't wish that this was easier. Investment is not easier. Just wish that you were better, that you know more. And
Mhm.
like knowing the perfect stock and trusting someone who actually knows how to do this is really as important as just putting the money out there. So that's a great
For sure.
how should someone think about long-term wealth building versus short-term gain, especially when social media really sees this as this
Yeah.
glamorous fast money?
Yeah, we live in the era of Dogecoin and Fartcoin and all these people who come into overnight wealth on a Trump token or something. And so people see that extreme outcome and they go, oh, this is what I can achieve through investing. Why aren't I doing this? Why aren't I taking on this ridiculous amount of risk,
Right.
concentrating myself and just throwing it, in the wind and seeing where my cards fall? I mean, look, like I said, some people they hit a gold mine and they get in on Trump token when the tweet goes out and they can do very well. It happens, but the reality is by and large, that's not the tried and true path to long-term wealth accumulation. You do need to again play the long game. When it comes to the era of short-term gains, I think it's good to keep a mindset of don't expect it, but if it happens, great. If great success comes a company's way that you invest in or a real estate venture or whatever it is that, whatever assets are in your portfolio, some of them are going to pan out amazingly in a short span of time, and that's great. But don't be alarmed either over the things that take a long time. Charlie Munger, Warren Buffett's very close friend and partner for many years at Berkshire Hathaway, is quoted with saying that the greatest gains come not in they come in the waiting. That's me paraphrasing it, but essentially Charlie Munger has a quote saying a lot of the times the greatest amount of wealth accumulation it takes time. It's not this flashy, sexy, short-term mindset so many people have today in the era of TikTok. We all have no attention span and we all want the instant gratification of I made all this money overnight. Investing, you really have to just accept that this stuff takes time. It compounds.
Yeah, because long-term vision is really everything. And that quote you said was very interesting because Albert Einstein himself actually said that he who understands it will earn it. and he who doesn't will pay it.
Yeah,
Which is so,
definitely.
so funny, but so true.
Absolutely. You see that every day. A lot of people will, buy on news
Yeah,
and they'll see, oh, XYZ companies merging with them and the stock's up 20%. So that means I should buy, right? Maybe. But the reality is the news is out. It's already been priced in. That's why it's up 20%. So you're buying into it and in this overvalued state potentially. Maybe it's not overvalued. And so a lot of people are like that. They're not necessarily proactive in their investing, they're reactive. And that reactive mindset can be a little illusionary in terms of like what kind of gains you can expect because things are already being priced in every second. That's some people's job is to look for arbitrage opportunities.
for sure, for sure. And that brings us to something very important. Can you explain diversification and asset allocation in just plain terms for someone who
Sure.
doesn't know all those definitions? And how can the everyday investor apply this?
Yeah, so the simplest way to think about diversification is to think of the age-old adage of having too many eggs in one basket. You want to avoid that circumstance as much as possible with investing because diversification shows you that over time, let's say you're fully invested in X company and they're international and they're this big conglomerate and you're super, you have so much high hopes for the products and for the revenue or whatever management maybe you love and you're fully invested in them. Your livelihood depends on the success or failure of this company. Well, if the following quarter happens and they miss earnings and the stock tanks, or there's an E. coli outbreak in their food product, or they have a change of management and the reason you invested is now gone, a million things can go wrong with a single company, is what I'm trying to say, and a single investment. And so if your diversification is the idea that if you spread out your eggs into multiple baskets, one of them could fail, one of them could not pan out, one of them could be an underperformer. But the reality is as long as you're investing in different sectors or asset classes, and when I say asset class, I'm saying stocks, bonds, crypto, real estate, precious metals, a million things. So as long as you're spreading out among asset classes and different sectors, that's going to give you a much more well-rounded return over the long run. And that's really that is something you learn pretty early on in business school is the potence of this effect. And it really is true. Over concentration is something I see all the time, and you want to avoid it.
For sure. That's an awesome way to look at it. It's just basically, if you think about it, that's what builds the sustainable wealth.
Absolutely.
How do you recommend people think about their own risk tolerance, and how does that influence the investor strategy?
Yeah, so one thing I do with my clients, and I think that I've heard is a great practice to have, is to run them through a few scenarios and to kind of gauge. You want to kind of get a gut check on what's their appetite for risk. If I were to show you your statement a month from now, and we were down 10% or 15%, how would that make you feel? If
Right.
the answer is sheer panic, or I don't care, that's going to help determine a lot of things for me. That's going to help determine where we should be, like what we should be in, because some people can't handle volatility, some people can, and so that's really critical. Um, and so I think when it comes to risk tolerance, you have to understand that there is a huge association with risk and return in investing and in wealth accumulation. Obviously, things that carry greater risk typically have to provide a greater return in order to compensate and attract and incentivize someone to invest in something. So if you're looking at a really high yield bond and someone will call me up and ask, oh my God, if the yield on this is tremendous, it's 10%, 11%. Well, you got to be asking, okay, there's risk inherent with that. That comes with there's a price tag to everything with every investment. And for those things that yield way less, let's say 2, 3%, well, the reality is that could potentially be basically almost a cash position or essentially sitting idle in a lot of ways. And so your risk tolerance is really critical to determine what kinds of things you should be in. And you really need to, it's tough because so many people think they have a high risk tolerance And then reality comes and it's their money on the line and their opinion completely changes. And so a lot of people think they can take on a lot more risk than they actually can.
This is so powerful because really understanding your tolerance is not really about math. Like you said, it's about psychology. How much
Yes.
can you tolerate? And I think there are two things that drive any investor, fear and greed, right?
Yes.
So it,
Absolutely.
which one do you choose to actually do this? Because you can be your own worst enemy.
Yeah, I mean, more Warren Buffett for you. I know you already threw him out. I'm going to throw him back to you. He has another quote, which is be fearful when others are greedy and be greedy when others are fearful. I'm sure you've seen it. Many
Yes.
people have. And it is a true statement. It says a lot. We are driven by two factors in investing, right? It is absolutely a behavioral game. There is so much momentum involved with investing. People are very reactionary, as I've mentioned, and often when things are high, people want more. People
Right.
want greed, and when things are bearish and markets aren't doing well, people want nothing to do with it. They want to completely avoid it. And it's honestly a contradictory, it's like a fallacy to think that way in some ways because sometimes the best opportunities are coming when you act as a contrarian. But, you know, that's not always the tried and true formula, but that's certainly an important mindset is these two driving forces, fear and greed, are absolutely always present in investing.
Yeah. So a lot of the books that I'm reading on investment talk about the plan of time that it takes you to invest. So why is it so important that someone plans an investment with a specific length? In other words, how should their strategy shift if they depend on the time frame of that investment, whether it's 5 years or 30 years? Is it even important?
Oh yeah. So time horizon is kind of like risk. It is very important because time horizon for an investor is going to determine the kinds of products that they should be in to an extent, along with risk tolerance, along with, you're going to gather all sorts of bits of data, like with my clients. Risk tolerance is an element. How long are we investing for it? That's another element. There's all these other elements you need to be gathering though. Age, health situation, do you have children, so on and so forth that we need to gather to help gauge where we should be looking for investing. When it comes to time horizon specifically, yeah, I mean it matters a lot because if someone's like, I'm buying a car in 3 years, I need this money safe, I can't be I need it. Like this, I need the car. My car is going to break down. My lease is going to be up, whatever. This money needs to be mine in 3 years. That's going to help dictate a lot. That's going to help filter out a ton of potential things we could be throwing you in. So yeah, time horizon matters significantly when it comes to investing. Um, and people who have that long-term mindset to give you kind of the flip side, you can take on more risk than you probably think. You can weather a few market cycles. You're okay with a pullback or two because the reality is you're not touching this money for decades. So yes, very important, very much correlated to what you're going to be putting your money into. So great question.
I feel like money is such a great equalizer when it comes to investment. And what I tell everyone that I know, the earlier you start, the more freedom you create. I wish I knew about investment when I was younger. I'm encouraging my daughter to do that, my kids. That's why one of the biggest gifts that we can give our children is really to teach them to invest young.
Absolutely.
There are so
Absolutely.
many options when you do investment, and I know I got confused first time we spoke. Stock, bonds, ETFs, we have index funds, real estate, alternatives. So how does a beginner decides where do I start?
Yeah. So, while I don't want to echo too much what I've said already, but yes, time horizon is a factor in answering that question. Risk is a factor in answering that question. Also, diversification is an answer for you. But I think it's also important when it comes to where do I start? I think keep it simple when it comes to investing. Keep it simple, keep it punchy. The best sometimes investment advice is to often just play the long game and to be a passive investor and to just follow the market sentiment, follow that. when it comes to where to begin on your journey with investing, it's challenging because I would need to know a lot of things about the individual to properly answer that question. And there's no rule of thumb answer I could really give. But I think, obviously you want to educate yourself. You want to do what you're doing, which is reading, researching, learning about different types of investment vehicles out there, stocks, bonds, real estate, learn about crypto, learn about all these things because they've been here for a long time. Even if they haven't been here a long time, they might be here for the foreseeable future. And different products are going to serve different needs and different situations. So really ask yourself, what are your goals? And I think starting from the end and working your way back can be a great way of figuring out what is the best investment vehicle for you.
Yeah,
That's what I would say.
this is so reassuring because so many people really get stuck because they think they need to know everything before they stop and start investing, right? But as you're saying, and from what I'm reading, Joseph, starting simple. And for me,
Yep,
starting simple was the index fund, right? Broad index S&P 500 was the
absolutely.
right,
Absolutely.
or something like ETFs. That's really the smarter, safer path, in my opinion. But
So yeah, I mean, there are different kinds of ETFs. There are different kinds of index funds out there,
right,
but so there it could mean a lot of things. But I think that, generally speaking, you're on the right track of passive investment vehicles that have low fees tied to them that are looking long term. If you're saving for retirement, might be suitable for you. And but I think we got to start with what's your goal.
yeah.
Your goal is going to really dictate things.
Right. So that brings me to what do you think would be the biggest mistake that new investors would make, and how can people avoid those simple, common mistakes?
Sure. So it's a great question, and I think number one, you're going to make some mistakes along the way. This is a trial and error game. When you're new to this stuff, you're going to have some investments that do not pan out. Clearly, you're gonna have to get burned a few times, usually the hard way, to learn. Okay, this is how that works. That's how this works. That's my risk tolerance. Okay, this is so there is a level of trial and error. But as far as the mistake that I would try to get through to people to avoid early on is to focus too much on the here and now. I think a lot of people, again, they see, oh, the XYZ company is up huge amounts because of AI or whatever. They're doing some kind of construction project or something. Some headline comes out. People get fixated. They over concentrate themselves,
Right.
and they get burned.
Right.
And that's one way to learn. You don't have to lose all your money to figure that out. You don't have to, burn some of your wealth figuring that out. Hopefully you can go into it, I think, with a more conservative mindset at first, get a feel for what works for you and what you're comfortable with. That's going to help dictate things for sure. So a mistake I often see is people calling me up about what's the flavor of the month. Here it is. I like this sector. I see it on Bloomberg. I see it on CNBC, and that's what we want to do. It's like, listen, you gotta be thinking about this for not just what's cool for the next 48 hours. So that's important.
Right. So just don't chase the trend. That's what he's trying to say. It's not always the right prediction. So you can't
Sometimes it is. I don't want to always say it's a blanket rule, but
absolutely.
yeah,
It's not. And what I think is right to say is that you can't predict, but you can be prepared. You can just make yourself ready enough with your risk tolerance, with what exactly that you're looking for, long term, short term, which really um, gives you the right decision at the moment. So how do
absolutely.
emotions like fear and greed that we just talked about affect the investment decision? And what framework can people use to stay disciplined?
Well, I think one thing people can do to stay disciplined is work with a financial advisor. I actually do think outsourcing some of that stress to somebody else is a great way to get your mind off of the market, especially if you're not. Some people are not as obsessed with this stuff as I am. I get that, and I see that. That's okay. So that's why people like me exist, is so that you can offload the mental stress and the rigmarole of navigating markets to a professional, somebody who does this every single day, watches the markets every single hour, and you can focus on what you're good at. And so that's one way to handle fear and greed and your emotions is to offload it to somebody else, out of sight, out of mind. Another way is to not don't look at it so much. I always tell people like and when I was early on in investing, I would always be looking at my investing app and I would be obsessed with every day. And I hung on to each day way too much. I valued each day way too much. And I think it's really important to be able to put the app away, delete it if you need to, look at it once a month, look at your statement, see what's the trend. But playing the day-to-day game is a dangerous game because every day you look at it's like you're window shopping. Sooner or later, you're going to buy something if you keep window shopping. Sooner or later, you're gonna have a panic attack because something's down and you're going to sell and then you're going to realize I regret selling. So fear and greed, it's always going to drive you. You're human. It's totally natural. Everyone feels this way. But when you offload this burden to someone else, I think it's tremendously powerful.
I think so. I think so. And I think wealth building is really not just technical, it's actually emotional intelligence, like you said.
For sure. For sure.
Emotionally mature, ready for whatever timing you need for that. And really, the big money is not in buying and selling, it's in the waiting process.
Yes, absolutely.
So, if you had to outline a simple roadmap for building wealth through investing, what would be the first 3 to 5 steps?
Sure. So, I think the first step to building wealth is going to be laying out your inflows and your outflows. Like, figure out what are you bringing home each month? What are you keeping? What are you saving? Because again, it's not about what you make, it's about what you keep at the end of the day. That's how you accumulate wealth. You need to figure out what is my income, what is my expense on a month-to-month basis. Really outline that. Be honest with yourself. Because why lie to yourself when it comes to stuff like that? People always love to exaggerate to others, but when you're doing this for you, like do it. And it's not fun, the budgeting part, I'll be honest. It's a painstaking process of laying out every expense, laying out your income, laying out your spouse's income, laying out whatever other things you have coming your way or don't, and figuring that out, doing that every month for a few months. So now you have a really good estimate on what the month to month looks like for you. Now you can extrapolate that to a year. Okay, now you know how much you can save in a year comfortably. Okay, where am I going to save it? Well, do I have a retirement plan set up? Do I have a brokerage account? Those are the next two steps is going to be it's going to be figuring out, okay, you know what you have to save, where are you going to save it? So it's going to be those accounts. So you're going to be looking at what kind of account do I need based on what I'm trying to achieve. That's goal driven. And then beyond that, it's discipline. The third step and beyond for most of it is going to be, okay, you've got the plan. Now you need to execute and you need to stick to it. You can't in 6 months be drawing from this account because you got greedy and you went on a shopping spree. Like you need to stick to the diet. If you stick to the diet, you're going to get the results. It's really that simple. It's a financial diet.
I love this because it really shows people that building wealth is really not a lottery ticket.
It's
It's
not.
really just a roadmap. And the good news is that anyone can follow those 3 simple steps that Joseph is giving that to us. Joseph, this was such a valuable conversation, and I hope the listeners also got a lot of value for that because you didn't just give us the basic, you gave us the framework that makes investing feel less
Thank you.
and more like a path that we can all just step into and go step by step.
Thank you, Olga. Well, thank you for having me on. You're great to work with. You're an awesome friend, and I'm always happy to come on to stuff like this for you. And I think wealth building is important for everyone. It's something, again, like I said at the beginning of this conversation, everyone has to do at some point, and getting ahead of these things sooner rather than later. But it's also never too late because no matter what, a saved dollar is always better than not for you for the future. It's great to do these things. It's great to talk about it. It's great to be aware and to educate. And again, if you don't like it, it's not for you. There's financial advisors out there that you can offload the work to. That's why we exist. So
And really trust the best. Trust someone who's certified, trust someone who knows what he's doing. And if someone wants to learn more, to get guided and connected with Joseph, where can they find you, Joseph?
Sure. So obviously our website, wellingtonshields.com, I have a contact there. My office phone is 212-320-2035. That's my office phone. So feel free to give me a call. And my email, we can throw it in a link or whatever we can post about it, but it's joseph.barbera, my full name, at wellingtonshields.com where I work. And that's my work email. So feel free to give a call, give an email, ask questions. I'm here to be a resource for anyone. So thank you, Olga.
That is amazing, Joseph. As soon as we're done, if you can comment on the link below so everyone can connect with you, feel free to leave your phone
No
number,
problem.
the email, because I think it's so important. And to everyone that's listening, remember, money is not just about wealth, it's about freedom. And the best time to
It
start
is.
building your freedom is today, not to,
Absolutely.
it's today.
Yeah.
And as the saying goes, the best time to plant a tree was 20 years ago.
Yes.
And
The
time
second.
is
Yes.
now.
Awesome.
This has been Limitless Live, part of September series of Financial Live. I hope you guys enjoyed this. I will put all Joseph's contact information below in the comments in a few minutes. Thank you so much for tuning in. And if you have questions, please feel free to comment. And until next time, stay limitless.
Thank you, everyone. Appreciate you tuning in.